is founder and fund manager at Helios Capital. Samir, great to have you with us here on the program. Thank you very much for your time. And thank you for staying up for us. I think you're in the US, so...
it's only
so thanks very much.
9:40 p.m., so it's
okay.
only
So that's not yours. All right. But anyway, thanks very much. Samir, the budget was just that interim one. And we'll get to the budget and what you made of it in just a bit. But I want to start with, I think, what is on the top of mind here in India over the last couple of days, which is Paytm. You know, the big 20% fall that we saw, the RBI circular, which kind of caused it. Yesterday, we heard from the management answering analyst questions. I'm not sure if that soothed nerves. But if you've been following it, your thoughts?
Well, we own it, so I won't talk much about it. But in general, I would think that what I understood is that this has more to do with the fact that Paytm Bank is supposed to be an independent entity with independent management, independent control. And they felt supposedly that it was, they had common maybe top management and common policies or things like that, rather than the bank being managed independently. Because from RBI's point of view, it might be that the bank is being regulated, but the fintech is not being regulated. So these two have to be completely different. If it is the case, if that is the case, it is still manageable. But if it is something more than that, then it would be bad. We have to talk internally. I'm in Miami. I didn't hear the thing. I only read and spoke to our head of research there. But it'll take some time to figure out even for us. But that is our model. Even yesterday, our NAV was okay, considering that one stock was down 20% because we buy 35, 40 names, and no one name spoils my sleep like it did spoil my sleep last night.
Samir, hi, good morning. Well, you're a seasoned investor in the market, so I'm sure no name spoils your sleep. But from an investor standpoint, a retail investor standpoint, if I'm not wrong, Helios FlexiCap Fund, as Prashant was also pointing out, there's, I think, little less than 2% allocation to Paytm.
Yes, all our funds are more or less around that.
Okay. So what do you do at a time like this? Because this is a larger issue, right? It's a corporate governance issue, so to speak. They have gotten multiple alerts from...
I don't think it's a corporate governance issue. I think it's an issue. But corporate governance means somebody's trying to fraud somebody, somebody's trying to take advantage of somebody. Mostly corporate governance means that the top management or the management is trying to take advantage of minority shareholders. Here, if the management has themselves just bought the stock from those Chinese guys a few months ago, you can't call it a corporate governance an issue, because when you are dealing in a regulated business, there might be an issue. It's not a fraud. Corporate governance looks a bit higher version than this. Of course, it's an issue. And for that, even we are not sure what we will do. So please don't take it as I'm trying to overly support it. But corporate governance should not be used that loosely, I would think.
Okay, fair enough. Let's get back to the markets then, right? There's one camp in the market that believes that the government ticked all the right boxes this time around, despite it being, a pre-election budget. They made some announcements on fiscal prudence, etc., which will work very well for the market. Do you think we're staring at a pre-election rally in the market now?
So first thing is, I didn't see the budget as I was really sleeping in Miami. There was no need to see it. Only twice in the last 20 odd years, I have not seen the budget. One was last night, and I think 1 or 2 years ago, I was in a flight from US to Singapore on that day by chance. And my office guys advised me not to change the ticket because it was going to cost me $500, saying, no, save the $500. And I didn't change it that time. But in general, I would think that a rally is happening and might continue because of the world is happening. But I don't want to any longer call it a pre-election rally as if the election holds any surprise. So we can just call it that generally the markets will be strong as they have been now in US and everywhere. So in that connection, yes, markets can continue to be strong, but let's not make it as if the event of election holds any surprise. I hope it doesn't hold any surprise, because that surprise can only be negative. Positive, we are all totally assuming that it's happening, and it is fair to assume that or project that. So yes, generally markets are doing well, both from domestic flows, and although last month FI flows turned out to be bad, because of HDFC Bank, and then Paytm I don't think caused that much of outflows. But in general, the results and all have been okay, nothing great in India. So it's okay.
All right. Hi, Samir. Good morning. Nigel on this side. Samir, the QSR theme, at one point of time, there was a lot of interest out there, and those stocks, they went to crazy valuations. Now, one of the stocks that, you have is Zomato. And I'm looking at some of these QSR companies. Dine-ins are not looking so good. That Zomato stock actually, do you believe it has more tailwinds from here on, going by, the kind of deliveries and the kind of traction we're seeing out there? And maybe that could be an alternate way to play QSR because of the kind of valuations that they had surged up to.
So I was thinking when you were starting this question that you're going to ask me about Westlife, because you Westlife also, and I would have said that. But
so give us a view on both then. Give us a view on both, Westlife as well as Zomato.
As I heard your question, I thought that, I was thinking where you were going. So I thought I'll say that I know Westlife results are bad, but not to worry, I have Zomato, which is the sort of the balancing thing. Because ultimately, these guys are competing in one conceptual big space. I think the Zomato kind of business has helped democratize the food eating business. So instead of just going to 10 guys, you have 1,000 choices. And that's why when the pizza guy is doing badly, because now it's not only one company or two companies that have the delivery. But we like both. Of course, Zomato's second part of the story, which I fortunately thought of it quickly in the beginning, was that their Blinkit is also a very good business. Competing with the Kirana stores. Kirana stores close, let's say, are open from, say 10 a.m. to 7, 8 p.m. These fellows, I guess, are open from 6 a.m. to 2 in the night. Half the time, they are a monopoly in your neighborhood. You don't have to be on the ground floor. You are on some fifth floor dark store. You are bargaining better because you have a national size compared to the poor local guy, whatever discounts or whatever margins he can get. And it's a good business. So that has got added, and that is why the stock is doing well. It's not doing well only because of the food delivery. But the food delivery, I have always argued that people keep talking on Twitter that how it costed them 70 rupees more and 60 rupees more to order rather than going out themselves and eating in the restaurant. And I always say, try it. Go and spend 2 hours in the evening going and coming and miss your Netflix movie. And then to see that, you go to the hall, you spend more money. The point is, it's value for money in terms of the time, the parking, the whole hassle of 10 people in the family all wanting to do different things and only meeting at the time when Zomato guy has come home. It's a different life and a different lifestyle, which now the people follow. I think it's a good business, but the stock is being helped by the fact that the second business is also doing well and actually very well.
You had gotten very
plus one more thing, because of the Swiggy's IPO plans or whatever, which I tweeted many months ago, well before they may have thought of it, and people used to say that there is big competition. And I said that when there is one listed player and one unlisted player, the unlisted player has no guts to fight a battle. Because if the listed fellow's stock price falls, the unlisted fellow shall always remain unlisted. And so they have to let the listed guy do well. And then there is some chance, some hope that at some big discount, somebody will buy the second company. You can't say, Zomato stock is down a lot, but by the way, I want to go public. So therefore, that is also, you can see that the pressure of competition has come down as these guys want to increase platform fee and other things, all which is good.
Samir, you were in early on Zomato, but at current price, are you still a buyer, or you think you would rather hold on to the position that you have?
So the thing is that in our business, because we are in the PMS and mutual fund and in the offshore fund, when new money comes, at least in the PMS and all, you can't have a different portfolio for every fellow. So till the point you don't sell, you basically buy. That's how it is. It is the old guy who's got the old NAV and the old price. And
I think
anybody.
Right. Samir, the other sort of obvious one to ask, and I remember we spoke early in January, and you told us that financials are the easy trade. HDFC Bank, I mean, of course, we've spoken about it quite a bit. And I think that was the consensus kind of view. And why not? I mean, valuations were cheap, etc. But it's not turned out that way since. What are you doing there? You think Yeah, and what did he make of all of this?
It is a
You know,
buffer.
the sharp price correction. Some said it was communication, it was not really results. I mean, your thoughts?
Actually, if you see the results of the other banks, it shows that HDFC Bank was not doing badly.
Correct.
If you see the results of the NBFCs, it shows that HDFC Bank was not doing badly. But yes, it was poor presentation. And also, you have to be on the front foot. I think the management was not, everybody was not there on the call. Mr. Jagdishan should have been on the call. You should have been aggressive. You see the other companies, you see the IT, they should learn from the IT companies. Nothing is happening. Every day they downgrade and then they say, we see some green shoots. And the whole world is happy in life. Just listening to the management saying, now we are seeing the green shoots. And then for 3 quarters, you downgrade earnings estimates. And again, you say, now I'm getting some long-term orders. I didn't get orders for these 3 quarters, but for the 4th quarter, I've got orders. There is so much storytelling in every business. I think our guys were too simple to sort of say that it'll take time or whatever. But I think overall it's okay. And as I said, our model is very different. In the month of January, if you see our mutual fund, it outperformed the index with our number one holding down 15%. So we call it, we view it as, and the other funds also had similar outperformance or some outperformance, that, it's a relay race where sometimes some stock does well, then another stock does well. Precisely every time, all of them don't do well together. But as long as the package is working, we would call it that we have money in the piggy bank, which shall
Samir,
someday.
just one final question from my end. You're also betting on this travel theme in a big way. In your FlexiCap fund, you have names like, Lemon Tree Hotels, Interglobe Aviation. Now we've seen some fabulous results from the likes of Indian hotels as well. Do you think the run is done on this space, or is there more to go?
See, the FlexiCap fund, I am not managing, but broadly, most of the stocks are similar because the research is common. And so I also hold some of these in my the fund that I manage, which is the offshore fund. But the travel theme is more, for now, it is a semi-secular theme, I would say. We don't know for 10 years and 5 years. But generally in the hotel industry, these things will stop when the supply increases. And these days, the supply depends on what was started 3-4 years back. And 3-4 years back was COVID. So there is not new supply coming up at a scale which can change the prices. Just to give you my personal thing, when I moved to India in 1993 for Alliance Capital, I used to stay at the Oberoi, because for 1 year I didn't have a house and I was staying at the Oberoi, which is now called the Trident in Nariman Point. And I was at that time paying about 6,500 rupees per night. And now for many of these hotels, maybe you can get it at 10,000 rupees, particularly if you're a long stay member. So imagine after 23, 24 years, the price in rupee terms per room has gone up some 50%. It is very, very low compared to the world. Right now, I'm in Miami and I want to tell you how much this room is costing. So the Indian prices are very reasonable. But more than that, I can tell you live, direct, my example, that it was like 33% lower at that time, or from that point, it's some 50% higher after 23, 24 years.
Yeah,
Although
I mean, we
now
don't
I'm
want to
talking
know
about-
we don't want to know how much your room costs in Miami. We are happy being here in Mumbai, not feeling bad for ourselves. But you have a good time.
I am not here for a holiday. I am here benchmarking hotel rooms and hospitality so that I can compare it to the Indian. Every day I work, every minute I work, remember.
Of course.
Samir, 30 seconds. I mean, you made a lot of investors, right? How's the interest level? More money coming into the market?
Yeah, it is. Next week also I'll be there in New York, but it's quite high. Now it has to be converted, but the initial interest is very high. It's very high.
Very high.
Actually,
All right.
it is the highest, according to us, across any country in the world right now, based on whatever was happening at this conference. Yeah.
Okay, that's what we wanted to hear. But thanks a lot, Samir, for joining us. Have a good
Thank you.
weekend, and thanks for being with us. Let's